Good day, guys. Good day, guys. I hope we are all good. I hope we are all blessed. I'm just going to do a quick bonus. I'm going to start off with a bonus for you guys. So depends with what time you watch this, but today it's Friday the 23rd of Feb, and I've got a pending or a loading setup on NZD So today I think my whole screen is visible because yesterday we had a bit of an error when I was showing my MT4. At some point, it didn't show. So today I'm just sharing my whole screen so that you guys can see. So this is my view. I've got a 1 to 4 setup. I've got a sell limit on NZD-CHF. Let's see if I can give you guys a rundown. So prices basically been pushing up. For me, the reasoning behind this trade, I feel like prices reached, or rather, this is the midweek reversal. So we've been pushing up since Friday, 1, 2, 3, 4, 5. So since Monday, we opened on Monday, price was bullish. High highs, let's agree that we in a bullish trend, right? High highs, high lows, high highs, high lows, high highs. Then we got equal highs here, and I'm anticipating price to sort of retrace back into the week's range is a midweek reversal. So basically, this is a lesson on its own talking about midweek reversals. But let's see if we can run a fib from Monday. Right. Yesterday we were talking about running a fib and using the bullish engulfing. So we just want to put it to test, see if we could have caught a trade starting Monday. So we were bullish, right? When we're bullish, I'm running up from this low, running up my fib to this high. Let me see if I can zoom it in a bit for you guys to be able to see the candles properly. Okay, so I'm running up the fib from the day's low to the high, right? Just as we read in the book. Then we want to figure out where is this 50 level, where is the 61.8 fib retracement. So on this particular price action, we do realize that price comes into the 50, right? There's no rejection, there's no candle telling us that we are buying. We wait. Price taps into the 61.8 fib retracement level. Then they give us a bullish engulfing right here. That's our entry. So we could have taken that trade. Again, if you can just mark 1 to 1, sorry, 1 to 2 or 1 to 3 is your target. That's perfect. So 1 to 2, the trade played out, as you can see right there. So this was Monday. It actually completed before the day closed. Right, we're pushing. So this is more like a little back test bonus for you guys as well, so that you can see that whatever the book is saying, if you apply it on the market, it says it should be applied, you can actually catch a good trade. So this was Monday, right? We know we're in an uptrend because price is creating what? High highs and high lows. The next day we come to the markets, okay, we're looking for a continuation. So this is for day trading. I don't really talk much into swing trading. So I like to show just simple setups which people can trade in a day or within 2 days or maybe 3 days maximum. All right. So the next day, what happens? Price gives us another run, right? This is the low, this is the high, and we just extend it. We're waiting to get a setup. What happens? Price retraces and taps onto the 50 level right there, gives us another bullish engulfing. That's another entry. We map out our trade 1 to 2. So when is safe entries usually when the candle closes. Those are safe entries. But if you're confident enough, you can even have sniper entries just on the 50 zone. But I prefer safe entries. All right. So on this, what I've also noticed is on that same area we had a demand zone. Do we agree that in this uptrend, price created an explosive push up here? Even though we didn't really have like a big explosive push, we did have an explosive move intraday, and we've got a demand zone right on this area here. Same time, it's lining up with our fib. Price taps the 50, closes here. Once you see that, you know that you can take the trade. So two things will happen, guys. Either the trade will play out or it won't. So if it doesn't, you learn. If it does, you secure the bag, move on to the next setup. So if you map up or map out 1 to 2, there's your 1 to 2 there. If you map out 1 to 3, depending with the momentum in the market, there's 1 to 3. Those who want to hold more and just a trail, they can do that as well until price retraces and takes them out. They can do that. There's nothing wrong with that. So this was Tuesday, right? We're moving with price. We're still strong bullish. Okay, we are on a winning streak here. If you were trading NZD, CHF, you're in a winning streak here. Again, price throws us another what? Another explosive move to the top side. We map out a fib here. This is the top. All right, your fib, you just extend it in the future, because remember, when you see this push, you are on Wednesday. This price action at the far end is not there. So when you see this high, you just map it out, especially after you see price retracing like this. So you map it out into your next day. Just wait to see how price reacts. So what happens is the first retracement doesn't tap into the 50 level, even though we have a bullish engulfing here at Asian session, which actually plays out. Price didn't get into our zone. So if you do not have any other entry criteria except the fib, it means you do not have an entry here. But check what happens is the day is about to close now. Price comes, taps into the 50, taps into the 61.8, bullish engulfing candle or a pin bar, whatever you call it. Price still plays out. If you understand liquidity, you know liquidity has been taken out. So I won't really mention much into things which we're not talking about. I'll just stick to the fib and the supply and demand zones, because that's what we've covered on the Candlestick Trading Bible so far. So right when we close that candle there, you map out your trade. Stop loss just below that zone. You map out 1 to 2. The trade plays out, map out 1 to 3. Trade also plays out just before or just during New York. Let's just extend it. Yeah, during New York session, the trade eventually plays out. So already you can see from Monday, you've already had 3 opportunities to trade. You had 3 wins. 3 wins, you just stop trading for the week. You know you're done. Right. But anyways, if you're following price, now they accelerate, they give that run to the top. So this particular run now is different from these runs. These runs were simple and clear, right? This run price is actually giving an intraday. There's intraday higher highs, higher lows, higher highs, higher lows. Meaning if you're on a smaller time frame, you can still trade it within these areas, right? But we cannot really run a fib here. Yes, you can if you want to, but personally, I wouldn't want to run a fib because I know the price has been pushing up for 3 days. I've been buying. What happens if price has been pushing up for 3 days? Most likely, it will retrace or it will reverse. A retracement or a reversal will happen. So I've got equal highs now. That's where today's setup comes in. So today's setup is based on other confluences though, but I just wanted to mention that the fib in a trending market, applying it on an actual market works. This is NZD. I rarely trade this pair, but I've lined up a setup just because I've seen something which has a greater potential for playing out. So I hope this helps in terms of your back testing and just seeing that whatever we're going through, especially between, I think it was page 120 to 132, that session is explained here. So if you miss something on the parts where the M24 was not showing, that's it right there. So we're going to continue with the book, guys. Okay, this is not a new share. We go straight to the book. Okay, we were on page 130, if I'm not mistaken. Okay, there we go. I think we're on something like money management or something like that. Oh, there we go. Just below this. Oh, there we go. Page 133. So we're just going to continue from page 133. Let's get into it. So we're going to talk about money management rules. I think this is risk management, but let's read and see what they say. So far, you've learned how to identify high probability setups in the market. This doesn't mean that all engulfing bar patterns are worth trading. That's also one thing to note. It's not every engulfing bar which is worth trading. There is a lot of confluences which you need for you to confirm, right? Especially the fib. If you are using the fib, that's a great tool to add to your arsenal, especially for those using plain charts or clean charts with no indicators. Fib is one of the best tools you can use as well. So price action signals with low risk reward ratios should be ignored. I think I touched into this yesterday as well. Once the criteria for a high probability setups are in place, there is no more analysis to be made. Just make sure you trade your trade as a potential of 1:2 risk to reward ratio. I mean that the amount of money you will win has to be twice the amount of money you will risk or more. All right. See an example below. So here we've got a demand area which they marked. It's a daily chart, meaning this is a swing trade. It's a higher time frame trade. Price comes into the demand area. I want you to also notice something when we talk of variations. This was an entry here, and this could have been a TP, right? But there's no bullish engulfing in the zone. That doesn't mean the entry is not there. It's just other criteria. Like I said, when you go to war, you need a whole kit of different weapons to use. So that's the advantages of actually reading through this book, because it gives you like multiple candles to look for. And if you've gone through other courses as well, you also see that you'll pick up something which you can use on top of the information you're getting from this book. So eventually here we get a what? Nice bullish engulfing, stop loss below the zone. That's your risk. What's the reward? Reward is to be double or thrice. So double is somewhere there. Sorry, single 1:1 is somewhere there, then double is somewhere here. So 1:3 is somewhere here. So this is a good setup which you can use or which you can take if you are actually swing trading. This is a daily chart, so you have to hold this for quite a long time. I hope this was clear here. As you can see, all the conditions were in place to take a buying order. The market was ranging, as we discussed before. Major demand and supply zones are the best price levels in sideways markets, right? So also take note of that. The formation of an engulfing bar in the demand area is a good trading opportunity, but you have to look at the risk to reward to make sure that the trade respects your money management rules. This trade has okay, I'll just pronounce this to like 1:3. Just be in mind, because I'm used to writing it like this, 1:3, but it just simply means the same thing. The lesser number is my risk, the higher number is my reward. So here the higher number is your reward, the lesser number is the risk. So don't get confused there. This trade has a 3-to-1 risk to reward, which increases your chances to be a winner in the long term. Because if you risk $200 in this trade, you are likely to win $600. It is very important to calculate your risk to reward ratio before taking any single trade. Case study. Imagine you take 10 trades with 3-to-1 risk to reward. On each single trade, I mean, when you win, you get $600, and when the market goes against you, you lose 200. Let's suppose you lose 7 trades and you won just 3. Let's do the math to know if you're a winner or a loser. 7 losing trades will cost you $1,400, and 3 winning trades will make you $1,800. As you can see, okay, I don't know, maybe there was a misprint there. As you can see, you lost 7 trades, but you are still making money. This is the magic of money management. So imagine you've got a 30% win rate, right? Out of 10 trades, you win on only 3, but you still end net positive, or you still end profitable. That's because of risk management. So as long as you can calculate your loss and make sure that your reward is at least twice or thrice whatever you lose or whatever you're risking, then in the long run, always calculate your profitability with a large number of trades. You can have a bad day, bad week, bad month. I always talk about this. It doesn't mean that your strategy doesn't work. As long as you've got risk management, and as long as you checking out your strategy over a large number of trades, then you should be winning, or you should be coming up net positive. Okay, the entry and exit strategy. Don't try to be smarter than the rest of traders. Keep it simple. You know what you're looking for. When you identify an engulfing bar pattern, you think all conditions are in place to execute your trade. Take an order immediately after the price action signal forms. Put your stop loss below the candlestick pattern and look at simply the charts to find the next support and resistance level. This is going to be a profit target. See the illustration below. Okay. So again, this chart is with no name and no time frame. I'm not sure what time frame it is, but it's just an example to show you supply zone. Price is currently trading down. For now, this looked like it was a range, right? Price came into the supply area, gave us an entry, stop loss outside the range. Where is the next target? So personally, how I trade, I like to mark where price was leaving zones. Then I put that's where I scale out. If price turned here, scale out there, scale out here, then close off my trade here. So this is, if this was a 1 to 3 trade, if I've got 3 positions split accordingly, I can scale out here, I can scale out here, and I can leave the rest to run to TP. There's nothing wrong with that. Or you can just use the outside range, like the author is saying. Then you can just target that and hold your trade until it plays out. The reason I scale out is because sometimes price will do this, then they'll actually retrace back into your area, maybe take you out. So you always like price to take something off the table, maybe move your stop loss from your entry to break even. But again, that's also like another lesson on its own. So here price came to the supply, then they dropped all the way to the support level, which was the profit target. When you set your protective stop and you target, don't never look back. Let the market tell you if you are wrong or right. This will help you to trade successfully out of your emotions. I'm sure most of you have heard the term set and forget. It's setting your price or entering your price, put your stop loss, take profit, then close the charts or look at something else or continue with your day or whatever. This takes out emotions because remember, price moves in waves. Sometimes let's say you've got an entry here, right? You're selling. This is your stop loss. This is your TP. Price flows down and you're watching it. Comes down, you are watching it, comes down. Maybe it's halfway, you're watching it. Then you see it retrace. Your profits will go from being, let's say, $600 to 300 to 100 to 50. Right? Prices back to your entry and you close here. Not knowing that if you have just left, this price was still going to what? Push to your TP. So that's what's being emphasized here when they say set your stop loss and your target. Then close the charts. Don't keep stalking price. Close the charts. Let price do what it does. Then you can check it later after a couple of hours. See whether you were right or you're wrong. See where you can correct yourself. Right? Allow price to do what it does. If the market goes against you, you will not feel good. It's normal losing money. It's normal. Okay, let me say this again. If the market goes against you, you will not feel good. It's normal. Losing money can be emotionally painful. It is our human nature. Nobody wants to lose, especially when it's about money. In the trading environment, you have to think differently and accept the fact that losing is part of the game. Studies have shown that successful traders don't risk more than 2% of their equity on each single trade. If you're a beginner, don't risk more than 1%. Don't risk money you can't afford on a single trade, even if the engulfing bar pattern you identify indicates a high probability signal. No matter how smart you are, you have to think always in terms of probabilities. Bear in mind that you can experience a series of losing trades, and if you risk too much money, you will not survive long. And that's fact. All right, I don't think there is any need to go to the charts for that. We're now going to look at the inside bar candlestick pattern. So this is now a different candlestick pattern, and let's get into it. The inside bar candlestick pattern is one of the most powerful chart setup that professional traders look out for. However, most traders fail to trade it successfully. True story. Lack of skills and knowledge and poor education are the major reasons why most price action traders don't make money trading this Japanese candlestick. What is an inside bar candlestick pattern? An inside bar is two candlesticks. The first one is called the mother candle. It is big and large, and the second one is smaller and it is located inside of the mother bar, right? Here's an illustration. We've got a nice bearish candle there. Then we've got a smaller candle which is contained within the bigger one. Price had been pushing down, but again, you won't just buy, right? You need to look for other confluences to tell you that you can actually buy at the zone, right? So that's an illustration example. The candlestick trading Bible inside bar at the top. So this is the sell version. You've got a bigger candle, which is your mother candle. Then you've got the smaller candle, which is contained within the bigger candle. And again, to trade it, you need more confluences. You don't just sell or buy when you see it. Okay. So the illustration above shows inside bars at tops and bottoms. As you can see, the second small bar is completely contained by the first one, which is the opposite of the engulfing bar pattern. The inside bar is seen as a reversal pattern because it indicates that the market trend is likely to change, especially when it is located at tops and bottoms. Okay, that's a point there. It is also considered as a continuation signal in strong trending markets. So I think this is where the confusion comes, because mainly, right, it's used for reversal. When price is coming up, you see at the top there, price will reverse. When it's coming down, you see that the bottom price will reverse. But it is also considered as a continuation signal, right? So price will be pushing up, retraces. Maybe there's a moving average, maybe there's a fib, like we said. It's not only the engulfing pattern we're looking for certain candles which the author speaks of in this book. All right, so let me not get too ahead. Let's just continue reading. According to Thomas B., a successful investor and trader with over 30 years of market experience, a bearish inside bar pattern in a bull market can indicate a bearish reversal in about 65% of the time. So price is pushing up, then you get an inside bar in a bull market. It will indicate a bearish reversal 65% of the time. Not always, 65% of the time. And in a bull market, it represents a bullish continuation signal in about 52% of the time. So in that same bullish trend, if you see it rejecting a certain zone or a point of interest, it will represent a continuation 52% of the times. A bullish abandoned baby, as he call it, is considered a bullish reversal pattern 70% of the time in bull markets and 55% in bear markets. This part can be confusing sometimes, but when we go into the charts, I'll try to explain a bit better so that it's understandable. The psychology behind, okay, let's see if they talk about this candle trading inside bars. Okay, they talk about it. Okay, the psychology behind candlestick, behind the pattern formation. So I'll get into the charts just after reading this because I still feel they're talking about the inside bar here. Yeah. All right, we'll get into the charts just now, guys. We'll get into the charts. So the inside bar formation indicates a period of consolidation in case of a bullish trend, right? It reflects that the bulls are not buying any further on the second day. It is represented by a small black candle on the second day after a strong uptrend. And in case of a bearish trend, it means that sellers are not in control of the market anymore. It is reflected by a small white candle after a strong downtrend. Your understanding of the psychology behind this pattern will help you better identify major turning points in the market and time correctly your entry and exit. I think to make this simpler and more understandable, we look only at the daily for this candle. Daily, weekly, and maybe the 4-hour. That's the best. Otherwise, if you go to smaller time frames, there's a lot of noise and you end up getting confused. So how to trade the inside bar candlestick patterns? Let's see, did I miss something here? Your understanding of the psychology behind this pattern will help you better identify major turning points in the market and time correctly your entry and exit. How to trade the inside bar candlestick patterns. The inside bar can be traded successfully in trending markets, particularly if the market is moving strongly. Take note. Because the formation of this price pattern provides you with a great opportunity to join the big move. This strategy is very simple. You have to identify a strong trend and wait for the formation of an inside bar pattern in line with the direction of the market. The formation of this pattern indicates that the market pauses before making its next move. This will allow you to enter the market in the right time and make big profits. See the illustration below. So this is Euro NZD. We are in a clear downtrend. And this downtrend is a bit different because you can see you cannot line up any fib here. You cannot line up any fib here. So now you need a certain tools, right? And in comes the inside bar. So trading inside bars and trading markets, entry after the breakout. Trust me, inside bars for me personally, they are confusing, but I hope for you guys it will be a bit understandable. Or it will be a bit more clear. So first we have defined that we are in a strong downtrend, right? This inside bar here, it could have signaled a reversal. So don't get that twisted. That's where the confusion comes in. But here we're working with the basis that we are in a strong downtrend, right? So after you mark your zone, you just mark it like they did here. You can put horizontal lines sometimes just to make it clear. So if you put horizontal lines, now this helps you to know that if you break out to the top, you're definitely coming up and this is a reversal, right? But if price breaks to the bottom, what's happening? It's a downtrend. So I think that's the best way to simplify this. It happens again here. You mark the top, you mark the bottom. Either they will come up or they come down. So these are just simple, clear breakouts. Sometimes there's a break and a retest, especially here, a break, a retest. Again here, a break. Again here there's just a clean break. Here's a break and a retest. All right, so through practice, I think that's when you can just be able to understand this a bit more, because just through reading like this, it can get a bit confusing. Because for me personally, it was a bit confusing as well, because this particular candlestick pattern, it appears in both reversals and continuation. That's where the confusion might come in. So as it is illustrated above, the market is trending down. The formation of inside bar pattern gave us 3 opportunities to join the trend. If you're used to our trading approach, you will only look for selling opportunities. This way, you are not fighting against big institutions and central banks. You are just trading in the direction that is favored by the market. So I'm sure you've also heard the statement, the trend is your friend. You can place a sell order after the breakout of the pattern as it is mentioned in the chart above, and your stop loss order should be placed above the mother candle. Your profit target is the next support level. Remember, if you're coming down, you're aiming for support and you're aiming for demand, right? If the trend was going up, you're aiming for resistance and you're aiming for supply. So don't get twisted with these terms as well. So let's see the example they're talking about. See another example below. This is a nice uptrend, and I like the fact that they put a trend line here. So remember on our lesson yesterday, I mentioned this. Sometimes you have your low here and your higher low is here, then you put your trend line, right? But if you see your trend line being too steep, just know that there's chances that it's not correct. Wait for price to show you at least another higher low, which is a bit better. For example, here, now the trend line is better. Even though we didn't get a third touch, but that's the best way you can actually put your trend line. And again, this is a very strong push up, as you can see. So we're looking for inside bar candles. So if you look at this, they are coming in all shapes and sizes. The only thing which makes it an inside bar is because it is within the range of the last candle, right? Within the range of the last candle, within the range of the last candle. It doesn't break out or wick out on the top or bottom or give a wick above the candle. Is within the candle, excuse me. So soon as you identify that you're in a trending market, guys, let's kill the markets. All right, so from the chart above, we can see how this price action setup works significantly as a continuation pattern. To be honest, you're not going to take all these signals into consideration, which is true, because remember, you need other confluences. You're not just entering because you've seen the inside bar. You need other confluences to confirm your trade. You have to look for significant patterns that form in specific areas in the market, such as support and resistance, fib retracements, levels, moving averages, or pivot points. Don't worry about that, because we'll learn about the important trading tools that we'll need to use in combination with the inside bar setups to make the best trading decisions. How to trade the inside bar breakout with support and resistance. Technical analysis can be very complicated if you don't focus on the most important basics, such as support and resistance levels. These areas represent a psychological level where the game is played between buyers and sellers. Let me give you an example. If sellers overcome buyers, they will push the price below the support level. Some buyers will feel afraid to lose money because they see that the support level is broken. So they will get out and sell the market again to cover their loss. Other participants will notice that sellers are in control of the markets, and they'll decide to sell the market and to help the bears push the price to go down. As a trader, if you have enough knowledge about support and resistance levels, then you can open your chart. You'll notice that the support level is broken and the bears are in control of the market. This is a good selling opportunity, right? But the question is, what is the right time to enter the market? The inside bar pattern is one of the most reliable price action signal that will give you the right time to enter the market and make big profits. Once you understand how to use it in combination with these levels, you get clearly what the market is telling you, and you'll be able to make good trading decisions. So here, we've got a zone. So this makes this what? A support zone, right? Because price is bouncing off this area. But what happens here? Price breaks the area, continues pushing down aggressively. So this is more like a break in the retest. Support zone becomes resistance. You get it? So trading bars inside with support and resistance levels. Let's see what the author is saying here. So in this particular example, we had this nice candle breaking, and we had an inside bar within that range. So if you are selling, stop loss outside the mother bar, entry at the breakout of the mother bar. Keep it simple like that. You definitely get your 1 to 2 at least. And this is H4. So this trade will also take some time, probably 3 days. What you also notice about this book, as much as all these setups or strategies we're explaining here work on all time frames, higher time frames are the best, guys. Tried and tested. Even me as a day trader, I've noticed that the best setups take at least 2 days to play out or more. So be ready to be patient, but just make sure you calculate your risk. That's all. So from the illustration below, shows how sellers broke the support level. It's actually the illustration above, right? How they broke the support level. The formation of the inside bar pattern after the breakout of this level signals indecision in the market, right? There's indecision here. Either this is a fake out or it's a breakout in a retest, right? So right now, no one knows if the support level is really broken. If you sell at markets immediately after the breakout of this level, you are making an aggressive entry, which is a little tricky and dangerous because the breakout is not confirmed. But if you're used to trading inside bars, you understand the psychology behind their formations, and you understand the psychology behind their formations, you know that the safest entry should be after the breakout of this pattern, right? Outside the pattern, not outside the zone. I think that's what the author is trying to elaborate here. You're not just taking a trade just because the trade is broken the zone. You're taking the trade because the price is broken outside the pattern. So this is the pattern, this is the zone. You get it? So don't get confused on that part. The breakout of this candlestick pattern is a clear confirmation that the market is not still in an indecision period, and sellers are obviously in control of the market, right? See another example. Here's another example below. So before we read much into it, let's elaborate it. So we've got a zone, right? This is a resistance zone, resistance zone, resistance zone. When they break here, we don't just buy because we've seen price break. We buy after they break out of the pattern. If there's anyone who's trading breakout, because I know there's traders who only trade breakouts, right? So don't just trade because the zone has been broken out. Trade after the pattern has been broken, right? That's the simplest way. I think this is also a very good note, because sometimes people just buy here because they see momentum coming, then price will come back, stop them out. So that's what the author is trying to explain here. And this, guys, this is a good long-term trade. Right? Imagine catching this if it's a Monday. It was actually a weekend. If you notice, okay, this is the H4, so it doesn't show. But anyways, imagine catching this on a Monday, or maybe until Wednesday, like we did on the NZD-CHF show setup I showed you. Imagine having a swing trade and not having to day trade each single day. That's good returns right there. So here we've got a nice mother candle. The inside bar is within. We break out, we are active. Entry, stop loss, TP at 1 to 3 or 1 to 2. Good trade, right? The chart above shows how the market participants interact with these levels and how the resistance level acts as a barrier. The market has had difficulty rising above. This horizontal level prevents buyers twice from rising any further. But in the third attempt, buyers broke through the resistance level. What is interesting is what happened after the breakout. Look at the chart again, you will notice that there is a clear inside bar pattern formed over there. The formation of this price action pattern indicates that the breakout is not yet confirmed. Remember, an inside bar formation means indecision and hesitation. So you have to be careful and bear in mind that a false breakout scenario is possible, right? What will make a difference between you and other traders is your deep understanding of how this pattern works. In this chart above, you know that the best time to place a buy order should be after the breakout of the inside bar pattern, not after the breakout of the horizontal level, just as I explained. So here are some tips on trading the inside bar price action setups, right? After this, then we can jump into the charts. We can look for some patterns. Let's see if we can successfully trade the inside bar patterns, right? All right, so the first tip, trade the bigger time frames. Like I mentioned earlier, H4, daily, weekly if you can, but just know the higher the time frame, the more you're going to have to hold. That's all I can say about that. But again, the higher the time frame, the higher the probability of the setup playing out. I'm not against trading lower time frames. You can trade these setups in 5 minutes, with the 5-minute time frame, using other technical indicators to filter out your signals. And take just high probability setups, right? This is for scalpers. But you have to be an experienced trader if you're a beginner. But you have to be an experienced trader. If you're a beginner, I recommend you to stick with trading the signal in bigger time frames, such as the daily and the 4-hour time frame, just like I say. Trading this setup on lower time frame will increase your chance to overtrade the market and take low probability price action signals. And this is the quickest way to blow up your trading account. If you focus just on one bigger time frame, this will allow you to set and forget your trade instead of being emotionally controlled by the market. So I just like how the author explains his point. He's saying trade the bigger time frames and he gives you the reasons why, right? So this is simple and straightforward. The reason number 2, or the second reason, trade the dominant trend, right? You should start trading inside bars in line with the direction of the market, especially in a strong bullish or bearish trend. But don't never try to trade it against the trend if you are a newbie. Take note. When you feel like you're a master trading this pattern with the uptrend, you can move to trade range bound markets, then maybe trade counter trends as well. The third part, trade only from key levels. Like I said, you need confluences, right? Remember that not all inside bars are worth your hard-earned money. There are specific locations where the setup works great. So make sure that your signal is located in a key level in the market. Find different factors of confluence. Trading in confluence means combining different signals to make the best trading decision. This is all, I think, to sum it all up, it's all about confluence. You need reasons to take a trade. Don't just take a trade because you've seen an inside bar. Where is it located? What is justifying your trade? I think that's what the author is also trying to emphasize here. To trade using this concept, you need to look for a point in the market where two or more levels are coming together and wait for an obvious signal to form. This trading method will give you confidence in your trading approach and it will allow you to avoid over trading. I love this book. I love this author. How to trade false breakouts of the inside bar candle. Okay, we might get a little confused here. Let's not rush things. Let's jump into the charts. So I'm not sure if we should use naked charts or the one with indicators, but let me see if I can use both. Let me see if I can use. Okay, so we're on H4, we're on H4, H4, H4. What do we have here? What do we have? I want to look for a trending market. Then we want to look for inside bars, right? So using this immediate price action here, let's see, what do we have? Okay, so let's say we've got a trend line here. Price breaks, there's no inside bar here. This is not an inside bar here. The reason being the wick is above the mother candle, so that's not an inside bar. So again, it will take time for you to actually figure out, okay, which is the inside bar I can use, which one is not. And on some pairs, there might not be inside bars at all. On some pairs, there might be plenty inside bars. So just bear with me again as we search for a pair which is going to give us better examples. Let's see. Okay, I don't have anything clear here. Okay, let's go to a clean chart. Let's go to, let me check what I have on my watch list. Let's go to, let's say GJ. And we're going to jump to the 4 hour, make the chart bigger. Right. GJ has been in a nice uptrend. So let's just see from where this price started pushing up. We're just going to look for an inside bar there. Right, we're just going to look for an inside bar. I would love to use this example, but I want to look for a confluence to actually explain it better. All right. So from this peak here, this is the lowest low, right? We've got a level here and a level here. As soon as price breaks, our bias is now bullish, right? Okay, let's start there. We've got a demand zone here, which was broken. Price sort of did whatever it did. Then they eventually came to break this level. So as much as this is not a clear example, I'm sure there is an inside bar, right? So let's look for one. Okay, so we've got this level here, which is now a what? It's a broken level. It was a resistance level when we were here. Let me zoom in. Okay, it was a resistance level when we were here, right? But price hit it and they broke aggressively. Then they came to retest it. But we don't have an entry, right? Okay, then we notice that, okay, wait a minute. We've got a big candle here. We've got a candle inside that candle. Isn't this an inside bar? I think it is. All right. If we think it's an inside bar, what you want to do is you want to mark the top of the mother candle. You want to mark the bottom. You can put a square like the author did. Just that I don't have a tool here. I don't have a perfect tool to actually put a square which is not shaded. Maybe I do. Let's see. Let me use this. Okay, so this is the zone, right? But this won't be clear for my illustration purposes. Let me just use lines. Okay, so this is the top of the mother candle. This is the bottom. We are not buying until we break above the mother candle, right? Price retraces, then it comes and breaks. So if you've got a buy stop order here, right? If you've got a buy stop order there, right at the top of the mother candle, your setup will look like this. Buy stop order, the author said we put our stop loss below the mother candle. The author said also we should use proper risk management. We should take only trades which offer 1 to 2. The author also said we should target the next support level. So if you look at this chart, where is the next support level here? You see these highs on the left-hand side. These highs here, these highs here, these highs here, these highs here, right? So which one is the highest high? The highest high is where you will find your liquidity, right? Let's put our highest high here. That's a zone. Didn't the author say we should take a trade when the price breaks outside the mother candle, the inside buy is there? He did. Didn't he say we should map our trade at least 1:2? We did. Didn't he say we should target the next zone, which is here? So we could have still taken profit at the top here, but 1:2 is pretty much perfect here. What I want you to understand is you can mark your chart like this, but you can take your trades with a smaller time frame. That's a skill which maybe I'll talk about in other sessions. Just not to confuse you guys, because there's a lot of information I need to put out. But everything we read about checks out in this setup. This setup took the whole week to play out. Okay, sorry, this is not the whole week. This is from the 8th to set up a TP around the 10th. So that's 2 days. Took 2 days to play out. Perfect setup, right? Okay, so let's move on with price. As long as we are agreeing that what we can read in the book, we can open the chart and find it. It means this is a good book. It's all about patience now to wait for that particular setup to show, present itself, wait for it to confirm, then execute, right? Okay, so the uptrend is continuing. We get another breakout here. Right, let's speak about this. After we get this breakout of this level, right, price comes to retest the area. Do we have an inside bar here coming from the downside? Do we have an inside bar? These, we can consider them inside bars if you want to go up, but we cannot buy until price closes what? Above the mother candle. And as you see here, price then came below. So here we had an invalid buy. We couldn't execute anything, which is also valid. You don't just buy because there's a breakout and a retest. There's no confirmation still of that retest, right? So again, the author says it helps us avoid over trading. We're not taking just random trades. We're waiting for high probability setups. Okay, so let's watch price. Price is moving. Okay, from here, let's say, okay, this is a bit advanced. Selling back into the range. We have an inside bar here, right? And we know that we've got a support zone here. If you understand price, if you are not a newbie, this will be understandable to you, right? So price, let's agree that price is set a new high here. You just extend it into the future. You will use it again, right? After you see that price is set a new high, you know that, okay, maybe this price is going to what? To retrace, right? Once you have that view, this is now an inside bar in a retracement. So I also want you to take note. We want to mark the low and the high. If this price had broken out to the top side, what would have been the situation? We could have bought. Do we agree on that? Let's agree, because we are in an uptrend, right? We know we're in an uptrend for sure. There could be a strong move that happens. I'm sure we'll find an example like that. But in your mind, if you know that there can be a retracement, you can be open to sell. So before I continue, be open to trade either way. That's the first thing. Be open to buy or sell, because that's what the market does. It can continue pushing up without retracing, or it will retrace. So in this particular example, was the sell worth it though? That's the $1 million question, right? So let's see if it was worth it. We're going to mark the bottom of the mother candle. Okay, am I using the wrong tool here? What am I doing? Okay, we're going to mark the bottom of the mother candle. You're going to mark the, all this you'll be doing it while this bearish candle is forming. Because remember, the candle doesn't just drop. This is 4 hours here. So after the inside bar candle, that's a 4 hour candle. After it closes, you mark this, you mark this. You already map your trade that if they do break out here, where is my 1:2? If I'm going back to support, will this trade give me a 1:2 here? Right? If you map it out, you see, no, it's 1:3. So this trade is really not worth it. If we are using this area as a support, this trade is not worth it. Unless you've got other confluences, unless you've been trading for a while in such a way that you know that, okay, here there's a demand zone here, there's also a demand zone here. But those will just be assumptions because there's no guarantee that they will hit here and continue coming down. They might just hit and push up, right? There's no guarantee. So this, for newbies, I would say, don't trade against the trend, just like the author said. That's why the author said, do not trade against the trend. Try to trade the simpler things or the things which are a bit clear and understandable, right? Try to trade those instead of forcing trades. So that's one point I want to emphasize. The risk to reward is not worth it. 1 to 3 is not worth it from this time frame you're looking at. It's not worth it, right? So we cannot take this trade. Even though it's an inside bar, we cannot take it because of that reason. So let's agree on that. So the bullish move continues, right? What happens here? We break the zone. We've got a nice candle here, and we've got an inside bar here. Do we agree on that? Soon as we see an inside bar above a zone, this was a resistance is being broken. So is this a breakout which is continuing, or is it a fake out which is going to come down? We don't know until price plays out, which is the reason why we also use what? Risk management. So again, what you want to do is you want to mark the top of the mother candle. You want to mark the bottom of the mother candle. The only reason which might make me not take this trade might be the risk to reward and the fact that the mother candle is too big. It's too big. But anyways, you never know. Maybe we've got a nice risk to reward. So let's jump to H1. We're looking to the left. We're looking for where this price will reach to. Is GJ creating all-time highs here? Let's see. I don't see any high. It's for, oh, there's a high there. There is a high there. Right. So from this high, we want to mark it into the future, right? Keep it simple, don't complicate things. Once we know where price is heading, it's heading to the next resistance area, right? We come back to 4 hour because this is our entry time frame. From the 4 hour, do you see where the support zone is or the resistance zone is? At the top there. Okay, fair enough. This is a long-term trade, guys. I don't think I would execute a trade to hold that much, but anyways, if you're swinging, this is it. All right, so price, what does price do, guys? Price starts to push up and it breaks out above the mother candle, right? Is the risk to reward worth it? So as the price is playing in here, we already map it out here. Stop loss below the mother candle, entry just above it, the breakout. TP at 1:2. Right, 1:2, or at the next next resistance area. And this is position trading. And if we don't have a news event, this is actually 1:4. All right, so we've got two particular playouts. This trade can give us 1:2, and we can take our profits right here. Or we can hold it all the way to the top. But again, price will not just push up. That's one thing I'm going to emphasize. Price will move in waves, 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 waves. Are you patient enough to hold through these waves? That's the $1,000,000 question. So one thing I also emphasize is work on your patience. But again, this is a setup which is actually in motion. So we are going to keep tracking this setup, guys. I want to see how this price plays out. For me, in terms of entry, I wouldn't want to enter here because it's a bit late. Price has already moved away from my point of interest. And the risk in terms of pip, this is almost 100 pips. This is 90 pips on the risk. And it's about 180 pips on the reward on a 1:2, right? And it's about 400 pips or 440 on the bigger setup. But just to get the 1:2 setup, the trade will be worth it. Use your risk calculator. Calculate 1% of your account. If you're trading a prop firm, 1% of 10,000, 1% of 5,000. This is the 1%. Execute it. Let it play out. Of course, it will take time to play, but your risk is good. You're just risking 1% or you're risking 0.5, whatever risk. The large number of pips must not phase you from the setup, especially if the reward part is worth it. Okay. So guys, I hope this is making sense. This is example of an inside bar on an uptrend. We got two setups here, one played out, one in motion. Let's see if we can get a downtrend maybe. What has been trending down? What has been trending down? Or maybe should we look at crypto? I know there's a lot of guys who trade crypto. Crypto. Let's see. Guys. Telling you. We had fundamental news sometime in Feb telling us that Bitcoin is bullish, right? Keep it simple. We know our trend. We are in a bullish. We've actually broken out of a zone here and we are bullish, right? As we are bullish, price doesn't give a chance to retest. But what do they give us here? There we go. Inside bar. The inside bar here gets broken right here. Right? This is the inside bar. This is the mother candle. As the inside bar gets broken, we've got 4 hours to decide, right? As soon as we see the mother candle, we've got 4 hours to decide whether, okay, we've got more than 1 hour to decide whether to enter this trade or not. We're going to enter either on the upside or the downside. Say that they will retrace to the support zone or they will continue, right? We read that this can work as a reversal or it can work as a what? As a continuation. This is an example, ladies and gentlemen, of a continuation pattern. So you want to mark your mother candle. Once you mark your mother candle, you wait. Either price will do this. They will retrace. Sorry, I used the wrong line. They will retrace. We're waiting for them to pull back to the support zone. But is it 1 to 2 though? It's not. So it's not worth taking the sell, right? So we're going to remove that. We already assessed while this candle, this next green candle is forming, we are assessing to see whether the sell is worth it or it's not. So we discover that the sell is not worth taking. Even if we see the price coming, the sell is not worth taking based on the time frame we're trading, right? Okay, is the buy worth it? Okay, let's see. Is the buy worth it? So we're going to map out a buy again. Top side of the mother candle. Bottom side. We're going to look to the far left for a resistance zone. So on this particular example, you see that I had marked this area as a supply zone. Right, so don't get confused. Price can still could have came and hit the demand zone and then sold, right? So don't let that confuse you there. So if you're using this, usually they will come to the, I'm not sure what you call the midline of the zone. It's got a name, just forgot the name. But if you mark it to that mid center where we could have sold from, you can see now, okay, perfect, 2.4, rest of the reward. Where is 1.2? 1:2, it's somewhere here. Can I take this trade? Yes, you can. At the break of the mother candle, you take your trade. It retraces a bit, yes, but it still moves all the way to TP. Do you agree? Yes, we do. After that, we've got another inside bar within that same pattern, which is this black candle here. This becomes the mother candle. This becomes the buy. This becomes the stop loss. Where's the take profit? We look for the next high zone. Right, we look for the next high zone or the next support zone. Don't get too confused with the names I'm using here. So the next high would have been is high here because there's definitely what liquidity lying above that area. So again, we could have entered. Okay, where's the zone at the top there? Top of the mother candle is here. So they're almost equal weeks, right? And the bottom of the mother candle is here. Can I take sales? Yes, you can take sales if the support zone allows this trade to be 1:2. So we'll map it again to our resistance. Again, it's not worth it to sell. As soon as you see that it's not worth it to sell, scratch out the sales. You're not selling this. Is it worth it to buy though? Right, top of the mother candle, bottom stop loss, 1:2, somewhere here. Done and dusted. If you want to hold all the way up here, if you greedy, you want to hold 1 to 4. If you, let me not say greedy, if you are patient to hold 1 to 4, you can still hold to 4. But I'm always happy with 1 to 2, especially on higher time frames like these guys. 1 to 2 is the best. You can go for 1 to 3 if you want. 1 to 3 is my go-to. There we go. 1 to 3, 1 to 2, 1 to 3, 1 to 4. They both played out, which means the odds of a buy playing out instead of a sell, they were high. So we could have bought, could have taken profit. So I hope this is making sense, guys. If you still need us, I feel like we've been going on and on. Right? If you still need us to do another session, hey, this is a lovely. Inside bars on a training market are awesome. They're awesome. They're awesome. We've broken a zone here, bounced on it. This has got a spike, so this is not an inside candle. We know we're pushing up, but we might be pushing up to these highs here, right? But we've got an inside bar here. We mark the mother candle. Are we leaning on the downside or on the top side? Whichever side you are leaning on is the side you take. Calculate your risk and you will be home dry. That's all I can say. So, ladies and gentlemen, this is it. That's the inside bar candle. Let's jump back to the book. Let's see what page we're on. We're on page 147. Right. This trading method will give you confidence in your trading approach and it will allow you to avoid over trading. We started today from page 130 something, 147, how to trade false breakout. Okay, so let's continue tomorrow with how to trade false breakout because I don't want these sessions to be too long. Sometimes you get bored in these sessions, man, so we don't want that. Okay, so that's it for today, guys. Candlestick Trading Bible. We're decoding this book, we're reading it, we're going through the charts, and we're seeing if this author is actually giving us good information. And so far, so good. You can actually just use this book alone and you still be profitable. And you can see the way I'm using it on charts which have indicators and on a clean chart. This allows you to pick which route you want to go if you're a new trader or if you're still struggling. Do you want to use naked charts? Yes, you can be profitable. Do you want to use indicators? Yes, you can be profitable. So today we're going to, tomorrow we're going to start on page 148. So that's it from me today, guys. Guys, if these sessions are helpful, if you're finding these sessions helpful in your trading journey, please don't forget to subscribe. Don't forget to like and share the video. Hit your comments. We're always open to constructive criticism, be it good or bad. Hit us with the comments. Let's interact. Let's see where you're lurking. Let's see where we can help each other. Me going through this book doesn't mean I'm a perfect trader. Trust me, I'm still learning as well. I'm still learning. With each day, I learn something new. So everything I say is just based on my personal view. Not that I'm perfect or anything. So also bear that in mind. Wherever we can help each other, let's do that. Let's all make money. Good trading.